what are some of the common challenges that you see in accelerating your capital velocity? I'm going to use that terminology again because we're talking about capital velocity today.
Look, it's commercial real estate investing at the highest level, okay, has it's been an old boys network for a very long time. If somebody wants to be an active investor in this business, just understand that it's going to take them 1 to 3 years to begin to get traction, okay? Now, if an investor wants to invest passively, not be the person walking a property, putting it under contract, finding the financing, doing the repositioning, whatever the case may be. If an investor wants to come in passively, well, they get a different game, right? They get a different strategy altogether, because what they need to do is, instead of identifying a property or identifying a market, they identify an operator. So if they can go in and find an operator, which is a lot easier to do than it is to find a deal, then they can begin to really tighten up and shorten their timeline for the cash flow that multifamily puts in.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba. As a real estate investor and a fund manager, I'm always excited to explore the world of real estate opportunities with you and for you. Today, I have a very good friend, Dave Seymour, with me. Welcome, Dave, to the Real Estate Vibe Show.
Hi, Vinki. Thanks for having me.
Of course, I'm super excited for this conversation. A little bit about Dave. Dave is a CEO of Freedom Venture Investments, and he's a renowned expert in commercial, multifamily, and ground-up BFR development. His success in real estate and business has caught the attention of major networks like A&E, CBS, CNBC, and he's also known for his blue-collar approach in white-collar world. I would love to learn that, Dave. Dave has transformed the private equity landscape, giving investors access to top-tier CRE assets traditionally reserved for the elite. So today we have a very interesting topic. The topic is accelerating capital velocity in sluggish markets. In today's uncertain economic climate, where market conditions remain sluggish, accelerating capital velocity is more crucial than ever. This involves optimizing the flow of investments to maintain growth and profitability, even in challenging environments. By focusing on efficient capital deployment, investors can navigate slow markets and uncover opportunities for sustained financial success. So with that being said, Dave, I'm going to start with this question. What does capital velocity mean in the context of real estate, and why is it particularly important in sluggish markets?
Yeah, great questions. So first of all, again, appreciate your capital. What does that mean, and what is the definition of a sluggish market? Real estate, for all of its bells and whistles and genius insight and, analysis and pundits and talking heads and gurus and, it just goes around and around and around. For all of that, it really is a very, very simple process, real estate, whether it's a single family flip, whether it's, owning a couple of units as a retail investor, a mom and pop organization, we call them, or whether you begin to expand, as we've done at Freedom Venture, and start building up a portfolio of units and ground up development work. The story is still the same, and I'll simplify it as best I know how. Money is a tool. It has very little value, especially in today's marketplace, thanks to the economics that we're dealing with. So if money is not valuable, why are we even playing this game? So I have to velocitize its value. I've got to have my dollar bills working as hard as they possibly can. As a nation, we tend to be dragged in or almost hypnotized into believing that saving capital is the way to get to a good retirement, right? Put it in it cracks me up. You look at the CD rates, right? Certificates of death that the banks have in the marketplace today. And I think because of the interest rate hikes that we've gone through, the LIBOR doing what it's been doing, you know, CDs are currently popping around 4.5% to maybe 5%. So the average unintelligent, uneducated investor could very well look at a 4.5% or a 5% return on their investment, or return on capital, interest return, and get kind of excited. But what not one single banking institution, retirement account, 401 chaos, or anything of that nature will tell you is that inflation today, who knows, is popping around 7, 8, 9%, right? So if I'm getting 5, but I'm paying 9 on goods and services, guess what? I'm still losing money. So how, in this environment, can an investor, an accredited investor, an individual, have any chance at all of working capital adequately, working it with velocity, working it with a good return profile? Well, I hate to tell you this, whether you like it or not, you can't do it in paper assets. You can't do it in the stock market, especially with the roller coaster ride we're on right now. Very few people are aware and pay attention to the fee structure inside a 401k. They don't understand the fund structures in which their capital is being deployed. They look at the bottom line and it says, hey, you got a 9% return on your money. And then they look for the dollar equivalent. So if I put in $1 million at a 9% return, I'm not a genius, but I would like to see my capital increase by $90,000 that year. And it doesn't. And if you look at the increase, it's probably 9% documented return, and maybe a 15,000 on the million, or 20,000 on the million is actually accrued in the account. Ladies and gentlemen, boys and girls, that is dumb, slow money. I'm going to say that again, dumb, slow money. It does not have the velocity, the strength, the ability to carry the investor into the golden years. Number one fear still in this country today is retiring with not enough money to get to the golden palace, right? To get up to wherever it is that you believe you're going to go after we stomp around on this earth and leave a footprint. You know, will I have enough? And not only will I have enough, what about the generations behind me? Are you going to build legacy wealth and generational wealth with the banking system? You know, if you look at the millionaires and billionaires, love them, hate them, whatever you want to do, but they know something that the majority of people do not know. And that's how to work capital aggressively, yet, and this is important, Vinki, at the same time, be risk adverse, right? Risk return profiles, risk adjusted return profiles. So what if an investor had the ability to talk to a fund manager like yourself, a fund manager like myself? What if we could put them into sticks and bricks, into structured return targeted profiles that way outperform most other vehicles in the marketplace today? Takes a little bit of education, but when you can start looking at a 3, 4, 2.5 equity multiple on capital over a 3 to 5, 10, 7-year period of time, it dramatically changes what that outcome could look like for the investors in their retirement years. So I get a little soapboxy because I've been a victim and a victor of uneducated strategies. I've been a sheep, and I've also been at the front of the herd. So, you know, that's kind of like my rap, if you will, around velocity of capital in a sluggish market.
Wow, you have summarized everything in one shot. And then you said a lot of good things. You said you're making your dollars work hard for you. And a lot of people do not have that concept because they're working hard themselves to make the dollars. But the concept of making your dollars work for you or making your money work for you is kind of far-fetched for them. And the second thing that you mentioned is in the banks, when you're banking your money, you're losing money, actually. You're losing the value of money. And it's not very, again, the concept is not very clear to a lot of folks either, you know. And we should be talking about that a little bit. And the other thing that you mentioned, I really love that, is when you're putting your money in the banks, you cannot create a legacy. You can never create a legacy, actually. So let's talk about that a little bit more deeper. You know, you already gave us the example, you know, how inflation is going so high, and versus whatever you're earning in your 401k and the bank, 3, 4, 5%. that's kind of a negative return for you because there is a spread in the middle that you're losing. That's how you're losing the value of the money. So in this kind of, especially in this kind of, economic downturn market, or you can call it sluggish market, where are you investing, first of all? Or what would you advise investors, where they should invest and how strategically they can just create this accelerating velocity for themselves, like go in the deal and get out of the deal?
Yeah. Look, it's not easy. If anybody tells you it's easy, run away from them. If you're beginning to go down this journey of alternative investments through commercial real estate investing, whether a commercial strategy, whether you're going through mergers and acquisitions, whether it's, whatever your alternative investment outside of Wall Street is, education is always critical, right? Education over speculation takes priority. If you begin to investigate and look for what we call GPs, general partners, or operators in our world, either multifamily existing structures that need repositioning to make them more valuable, or whether you spend some time with a cat like me, where we'll go in and take out land, we'll entitle land, we'll build to meet a demand that's in the marketplace. And that's where we get down to the meat and potatoes, right? The true crux of the matter is that if the GP, the operator, the person that you're anticipating, working capital with, if they're not in the right market, and if they're not on the right side of a buy equation, it doesn't matter how many Rolls Royces, private jets they have. It doesn't matter whether their YouTube video as I'm doing this silliness with $100 bills. It doesn't matter whether they tell you they're going to 10, 12, 20x your return profiles. They're clowns. Okay, understand it. If it looks like a clown and it sounds like a clown, it's probably a clown. Okay. So what that means is that you have a responsibility to get educated to the point of asking the right questions before any action or reaction takes place. So what are those questions? Am I in the right marketplace? Well, what is the right marketplace? That marketplace is the basic, good old-fashioned supply and demand profile. Is there not enough housing units to support the population that's growing in the market? Nice and simple. We don't have to go super crazy with it. We don't have to overanalyze it. So where are those markets? Well, during COVID, for example, we saw massive amounts of migration. People were moving out of California. They wanted to be in Arizona. People are moving out of California. They want to go to Texas. Where I am up in New England, Boston, New York, Connecticut, the New England markets, everybody's like, we got to get out of here. Where do they want to go? They go south. They go to Florida. They go to the Carolina markets. So start to understand what the demographics are. Because if you can determine demographics plus policy, it allows you to predict the future. That's a very bold statement. Demographics plus policy will predict the future. So if I can see where the demographic is moving, Florida is the #1 retirement state in the country still today. For every one retiree, it creates 4 service positions. Restaurant workers, dental assistants, medical assistants. Think of the elderly population. We live longer, so we need to be supported longer. So demand, demand, demand. Then you look at, well, is there enough units for them to live in? So I'll give you an example. Cape Coral, Florida, where we do a lot of our construction and new development work. They did their own independent survey, 2019, 20, I think they did it, prior to the COVID crisis. And they determined, based off of an independent survey, that they needed 10,000 more housing units by 2027. You know how many they've actually built? 1,800. 1,800. We cannot build fast enough to meet the demand. So if I'm in a market where the demand is high, well, now I got to start looking at the cost side of the equation and the income side of the equation. What are rents doing? I will give everybody who hears us, Vinki, a big old red flag. If you see an operator who projects out year over year over year, 5, 7, 10-year runs, if they're telling you rents are going to increase 3 to 5 to 10% every year for 10 years because we had 1 or 2 years of massive rent growth, again, clown. okay? Clown. They're not based on fundamentals. It's not based on the understanding of the cycle that is involved in real estate, because real estate is always cyclical, right? So if it's cyclical, I can look back and say, yeah, it was a massive pop for a couple of years, but what was it doing before that? Well, it was parlay. It was kind of level ground. So always understand that what goes up is going to come down, but it will always level out. And then once I understand my income and expense ratios, if all of these numbers are beginning to make sense to me, then I can begin to choose to invest in those markets where I see that growth. So for us, you asked me, what do I invest in? I invest in the markets that make sense. I invest in the markets that tick the boxes. I'm up here in Boston doing this call with you today, but my two partners walked our property, a 106-unit build that we're getting ready to put into the marketplace in the next quarter, God willing. Just walked that property in Florida with our new property management company. But I'm up in Boston. I'm investing down in Florida. I know investors that do very well in the Texas markets, the Carolina markets, like I said. So there's a couple of things. I like to invest where the demand is, and this is very important for me. I don't want to get political, but it's a reality. I want to invest where I'm welcome, okay? I want to invest where I'm not taxed and taxed and taxed and taxed over and over and over again. I do not want to invest in a market where my tenants are rewarded for being slouches, okay? I don't want to invest in that market. I will give our tenants fantastic, clean, clear, direct, safe, beautiful housing. And in return, I expect them to pay on time. I expect them to be a good tenant, to be a good steward of the community in which they live. So I want to be in those markets. So financially, does it make sense? Does it make sense on the demand side? And is the government, the town, the city, the state that I'm doing business in, do they welcome me? And if I'm able to start ticking all of those boxes, then I start getting closer and closer to that acquisition part of the process. Does that answer your question?
Yes. Oh my God, that was so awesome. Thank you so much for all the tips, how to figure out where to invest and how to target the right market. And you said it very well. You don't have to invest in your backyard. I live in California. I do not invest in my backyard.
Yeah.
I have no intention to invest in my backyard either. So I just look for the markets. Those are lucrative, emerging markets, like you said, job growth, population growth. And those are the good markets where I can invest and I can easily multiply my money. So why would I invest in my backyard and take so much pain without any reason? I don't have any intention to do that either. But being that said, you have raised excellent points, where to invest, how to invest. So there are always some challenges, when you're starting investing or looking in these markets. So what are some of the common challenges that you see in accelerating your capital velocity? I'm going to use that terminology again because we're talking about capital velocity today.
Look, it's, commercial real estate investing at the highest level, okay, has, it's been an old boys network for a very long time. If somebody wants to be an active investor in this business, just understand that it's going to take them 1 to 3 years to begin to get traction. Okay. Now, if an investor wants to invest passively, not be the person walking a property, putting it under contract, finding the financing, doing the repositioning, whatever the case may be. If an investor wants to come in passively, well, they get a different game, right? They get a different strategy altogether, because what they need to do is, instead of identifying a property or identifying a market, they identify an operator. So if they can go in and find an operator, which is a lot easier to do than it is to find a deal, then they can begin to really tighten up and shorten their timeline for the cash flow that multifamily puts in. And one of our investors wrote a check for, I don't know, it was 300, 350, something like that. And he was a business owner. And he said to me, he said, David, I know my business exceptionally well. He was in the garment industry. He says, I know my business like the back of my hand. He said, I know 95% of your business. He said, I'm not a stupid man. He said, but I understand kind of what we're doing here. And then he said something which was very profound, and I never forgot it. And it, kind of wakes me up at night sometimes. He said to me, David, I'm investing my family's future retirements with you. He said, so I'm investing on the jockey, not on the horse, right? So for anyone who listens to us, I would ask you to take these things into consideration so that you don't meet the barrier to entry. Okay, because that's really it for everybody, is a barrier to entry. How do I get into these things? To remove the barrier to entry with risk adjustment and confidence, you need to be able to communicate with the operator. One of the things that we've done at Freedom Venture is intentionally allow us to be available to our investors. Okay. If you go to BlackRock, I promise you, you're not going to get the CEO of BlackRock on the phone. Okay. If you go to somebody who's waving their big stick around, look at me, I've got 3 billion in assets under management and a Rolls Royce and a private jet. I promise you, you won't be able to get that individual on the phone when you have a question. You'll be sent through a multitude of other people who don't know the answers to your questions. So find an operator, us, anybody else, your side of the equation, find an operator that is available to you as an investor. Because at the end of the day, it is a true partnership between their capital and our expertise. So our expertise at Freedom Venture, 3 principles, over 70 years of experience in real estate, multiple cycles that we've had to navigate, right, and go through. How about a hurricane, a 5, came right through Cape Coral, Florida, where we were doing business? Do you have confidence in your operators to know that they can overcome the challenges that are going to come your way? And then are they going to communicate those with you? So, what are the challenges, you ask me? The challenges are really simply this. How do you find the best operator? Because your chances of finding, locking up, allocating, controlling, building, repositioning a multifamily asset in a market that you're not familiar with is really going to be second to none. Now, there's people out there in the education space, they will tell you hands down, if you invest in my $50,000 mentoring program, if you invest all this time, money, and energy into my systems, you too can do what we do, only you can do it in a shorter period of time. It's BS. It's BS. Because I promise you, in every market has a small pocket of real players, brokers, accountants, lawyers, operators, GPs, et cetera, et cetera. It's a small community. The fastest way and the safest way to get into that community is to come in on the back of one of the operators already doing business in that market. That gives you the added protection. You don't have to now go out and get a $19.9 million construction loan. You don't have to go out and put an AIA certified contract together. You don't have to go out and negotiate with multiple insurance companies so that you can now at least insure your property without the whole deal getting blown up because we're doing fractional insurance today. You don't have to go out and find the SEC attorney and the real estate attorney who knows how to manage. And more importantly, you don't have to go out and find that accountant who needs to be able to do hundreds of tax returns just on one asset. This is not for the faint of heart. You can't wear your short pants in this business. You got to wear your long pants. You got to stand up tall and be able to carry some knowledge into the arena so that you can execute on that game plan and be able to pay your investors 3 times their principal, 4 times their principal over the time period that you targeted out to get that money back to them. So, there's a lot of moving parts. Barrier to entry, 99% of the time, is the 6 inches between areas, right? I can't do this. It's too big. I'm not smart enough. I'm just going to give it to my dad's stockbroker like he did before him. And the stockbroker's going, yeah, keep doing that, right? Fisher Investments, Schwab, we got them all. We got all the BS out there. Why are they marketing more than we are? Because their budgets are billions and billions of dollars in marketing. Ours is a podcast telling the truth. So that's the difference.
You said it very well. Thank you so much. And then I wanted to dwell a little bit on barrier to entry. I think it's barrier to entry. Physically, they're too outside, but I think it's more like at the mindset level too.
Yeah.
You're pointing here. So I wanted to maybe talk about that a little bit more because we create our own limitations, So how have been your journey Did you ever encounter that imposter syndrome, like I'm not good enough when you're starting, or how should I do it, or would I ever get there? All those kind of limiting beliefs, they just pull us back. Did you ever encounter any of those things? And
I
how did
did,
you
yeah.
overcome those?
Yeah, I did. But I also have a toolbox that allows me to overcome them and not be controlled by them. So I said, invest on the jockey and not on the horse. I can only share our experience. I spent 16 and a half years as a firefighter and a paramedic working in the city of Lynn, Massachusetts, which was inner city. A lot of gang violence, domestic violence, fires, just nastiness, just unpleasant things. And then on my days off, I'd work in construction, which was really what was sowing the seeds for where I am today. Now, my business partner, Walter Novicki, he's also about my age. We're in our late 20s, also my age. We've been around the block a few times. We're knocking on 60. And Walter retired from the Special Forces, Major Walter Novicki. He ran a crew of guys that did things that he can't talk about. So let your imagination run wild. Now picture Special Forces, paramedicine, that's our background. So when it comes to the fear of overcoming a large construction deal, managing personalities and egos and everything else that goes with it in our business, there are many times that kind of come up out of the foxhole. Look at Walter, and Walter looks back at me, and I say, is this an emergency yet? He goes, not yet, brother, not yet. I'll let you know when. So having that support, right? Having that infrastructure around us and underneath us is a huge deterrent to I can't. Henry Ford said, if you believe you can and you believe you can't, you are correct, right? A lot of work has been done on the power of our minds. If I anticipate things going wrong, they kind of go wrong. But if I pray and I focus and I stay true to the path, things will always work out. I hear voices in my head, and maybe I shouldn't say this stuff, but it's the truth. I hear voices in my head, and the voice that consistently pops up in my head says, all will be well. Keep going, David. Keep going, kid. Don't give up. Put your shoulder in, lean in. Because at the end of the day, as fund managers, as developers, real estate, multifamily repositioners, not just like the syndicators who are kind of on the periphery, but the guys actually in there doing it. We lean in, we work for the investors. That's what we do. So we're not there on a part-time basis. And to be very honest with you, we're the last ones to get paid. We're the last ones to get paid, but we have that confidence because of a track record that's proven that allows us to just keep going forward day in, day out to get the returns profiles that we've targeted for our investors. It's a crazy business. I never thought I would be here. Never thought I would be here. But God's got plans. I just lean into it and follow the plan as best I can.
That's true. I like that actually, like you said, you hear the voices in your head. Everybody has the voices, but people choose to ignore that. That's called intuition. Some people, they say that this is my gut feeling. That's their, voice telling you. So it's like guiding you all the time. It depends upon you, how much advice you wanted to take it from yourself versus other, because we trust others more than ourselves. That's the epitome right there. You can see, because we'll trust the other person and we'll try to take that advice, whether they have something done before or no. We just feel like more confident doing that versus listening to our inner voice. And I'm glad you did that. You got a, like I was a strong mindset right there, and that brought you here wherever you are today. Kudos to you. So let's talk about a little bit, back to our topic, accelerating capital velocity. Let's talk about the timing, because timing is very important. How can investors best position themselves to take advantage of the market fluctuations, and especially today's market, because it's so much uncertainty. People are hesitant, they're sitting on the sidelines, they're waiting for the right time. So basically, let's talk about what is the right time. Like for me, I would say every time is the right time. When things make sense, numbers add up for me, every time is the right time, but it's not the true for everybody because everybody look at things from a different pair of glasses or different set of glasses.
Yeah, so that goes back to our conversation around competency equals confidence, right? Competency equals confidence. There's nothing more scary than the unknown, right? There's always a tiger or a dinosaur around the corner that's going to chew me up. That's our caveman brains operating 24/7. So, to be in the market and to be a part of the market and to time the market right, you hit it, Vinki. It's always the right time. Should I wait to buy real estate, or should I buy real estate and wait? Right? That's really it. And one of my mentors early on, over 15, 16 years ago now, he said to me, David, he said, you will make your money on the buy side of every transaction you do. I'm like, what are you talking about? He said, we make our money when we buy, we realize profits, cash flow, equity, appreciation when we sell. He said, if you buy it wrong, if you buy it with, this could happen. He said, if you buy it with that kind of intuition and due diligence, you're setting yourself up for failure. He said, but Dave, if you can depict the principles, the fundamentals, as you said, right? It's always the right time if it makes sense. And your sense and my sense is different from somebody else's, but we've been playing this game for a little while, right? So I create a history that allows me in confidence to buy every single day of the year for the next 10 years because I know what strategy to use. During COVID, we thought we were going to go through a repositioning time. And we thought there was going to be opportunity because of mom and pop distress, and what do we see? We saw the good old government open up the checkbook, and that changed the environment totally, didn't it? Let's get the checkbook out, print some dough, Joe, just throw that money out there. It's almost like the old pulse lending again. If you got a business and you got a tax return, we'll give you some money. And that just smashed the strategy that we had. So for us, it's like, okay, let's pivot. Let's go in this direction. Let's do this next. So, the fear of doing something is diminished and refocused into acceleration. And again, velocity of capital in the marketplace, because we know that the strategies we use are right for that time. And if the indicators change and I got to hone in on a different direction, I've got I got quivers. I got a couple of different arrows in my quiver that I can fire at a strategy that has a propensity to be more successful than others. So look, again, if somebody's listening, you're back in the horse or the jockey, and does the jockey have a mass, almost like a Batman, right? How Batman's got that belt on? And he's always got the right thing, whether it's a batarang or he pulls out the Batmobile, or he's got some kit, right? We have kit. I've got some kit. I got a guy for this. I got a girl for that. We can do this. We can do that. And then, parlay that business plan, that strategy succinctly so that everybody understands it. We're going to do this. We're going to buy it, we're going to develop it, or we're going to reposition it. This is why, this is how, this is what the market demands for us. Why wouldn't that be the right time? But here's the challenge. There's three kinds of people. People who make things happen, people who watch things happen, and then there's the third group, unfortunately, they just turn around and they go, what happened? Right? Like they're like, well, I had a lot of money in my 401k account and it's all gone. What happened, right? That's the reality of it. So it really does come down to a choice to choose to get in. And here's the sad fact. We are on the brink of an impending crash. There's enough documentation, inversion of the bond yield curve. All the indicators are there. The economic indicators are screaming and shouting, watch out, here it comes. The pundits won't ever tell you. CNN won't tell you. CBS is not going to tell you. CNBC, all of those clowns and Wallies sitting there in their suits. Okay. It's a joke. It's a freaking joke. So the sad part is that when this sucker hits, there will be two types of people. There will be victims, unfortunately, a lot more of them than there will be victors of the next market cycle. What side of the equation do you want to be on? What side? Everybody goes, oh, I want to be on the victor side. I want to be victorious. Really? Then what are you doing about it? Well, no, I called my stockbroker and he said, keep my money in the market long term. Of course he did. Of course he did. Why? Because he gets paid for assets that are under management. He gets to smash the 2 points on the $1 billion portfolio, on the $100 million portfolio. He's always making his money. And don't get me wrong, go make your money, but make sure that everybody is educated as to what the heck is going on, because a lack of education will destroy your future, period, end of chat. So getting educated gives you the ability to make decisions. It's always the right time to be in the market. The timing of the market is necessary for paper bullshit assets. Oh, I swore, sorry. It's necessary for paper assets. It's not necessary for our business because we have control over the investments that we get into. I don't have control over what the stock market is doing.
You said it very well. I agree with you 100%. You got to be on the driver's seat all the time because otherwise you're going to keep on getting crumbs all your life. Because all these money management guys, they have the fiduciary responsibility for your money. Yeah, that's fine. But at the same time, they're making tons of money. So if you can be in charge of your own money, you can do the same thing. It's just like you have to give yourself permission to do that. So what do you see in your crystal ball? What trends we should be all aware of? What's coming next?
Yeah, look, again, the indicators for the stock market are pretty dire. We're now beginning to find out that the jobs market isn't as robust as the Democrats are telling us. We're beginning to find out that the inflationary numbers, yes, they may not be rising, but now they're changing a lot of the underlying calculations that go into the inflationary numbers. You know, I would always ask, what are you paying at the grocery store? What are you paying at the gas pump? How's your insurance costs looking this year, right? Let's start talking about those numbers. Those will tell you the true story of where we're at. So if I'm in an environment that's inflationary, if I'm in an environment that's predicting clearly to those that look, it's predicting some kind of market crash or recessionary environment, what do I want to do? Where do I want to go? So again, the majority of people will do nothing and suffer the consequences, but there will be a small elite group, folks like us, who will move anything that's liquid in any capacity. Dear God, please don't leave it in the bank. Anybody who's in a situation where they have access to capital, either retirement fund capital, liquidity, maybe get out of some of their stock portfolio if they chose to. They'll have some challenges doing that because their broker will tell them not to. But anyway, anybody who's got access, where can I put it for a recessionary proof environment? Statistically, it's always been sticks and bricks, right? It's always been commercial real estate. But why is that? Discretionary spending will go away. I just saw today there is a massive amount of our restaurant chains are beginning to just close their stores. All the chains that we're familiar with, some burger joints, the Texas, the Australian Texas place, the steak place. I mean, all of these franchises, they're just downsizing and they're getting out. And they're getting out for two reasons. One, people can't even afford to eat there anymore. And then number two, the cost of food has gone through the roof. There's no margin. There's no delta. And when there's no delta in the world, where are you going to go? You got to go to the fact that there's the first bill that people will pay is always their shelter. And we get to supply shelter for them. So being able to be a part of that service-oriented business of supplying good, safe, clean, affordable housing. I'm not talking about high-end condos for the rich and famous. It's not what I'm talking about. I'm talking about workforce housing, police, firefighters, nurses, restaurant workers, if they're still in the game. Anybody who's in that kind of service industry will always pay their bills first. So for us, you ask me, what do I see? What's my crystal ball? My crystal ball is to always be supplying housing to people who need to be housed. Because what are we going to do at the end of the day? The government isn't going to let us all sleep on the streets like they do in some towns in California. They're not going to let, sorry, Vinki, I threw that one out there. You know, the government's not going to let them all sleep on the streets, but there will be a massive migration again into the housing market. And, you know, our goal is to be there, be prepared to help. And is it okay to make great money and do great works at the same time? I think the answer to that is a resounding yes, right? So
Yeah, it's
serve the
resounding
people
yes,
when
yes,
they come
of
in.
course.
Yeah.
Yeah. Thank you so much for that answer, Dave. I really like that. We are out of time. Actually, we are over time a little bit. So I can keep talking on to you. It's such an interesting topic, you know. But since we are out of time, we might want to have you back again to continue our conversation. So at this point, I'm going to ask you, can you share one golden nugget with my audience? Could be anything on the market, on mindset, whatever you like.
Yeah, it's always education, not speculation. That's the
I
nugget.
like that.
Get educated. Yeah.
I like that. So this brings us to our vibe rapid fire round. I'm going to ask you 5 questions. You're going to answer in 1 word or 1 sentence only. Are you ready?
I'm ready.
All right. The first question is, what is one of the most important things that you've learned in your life? And how did your life change after learning it?
Replace my fear with faith. That was what I learned. That fear is just the devil hiding in the corner, trying to steal. And once I made that commitment and that decision, I was able to step into pretty much anything and everything and garner some level of success. So just know that fear isn't real 90% of the time. It's just a thief, and then overcome that and step into faith.
I think it boils down to the same thing, like you're talking about learning or educating yourself, because there's a knowledge gap. Whenever there's a knowledge gap, there's a fear. You're hesitant of taking any action or doing something because you do not know enough. So if you increase your perception, get enough knowledge, it will help you make the wise decisions in your life. So the second question is, share one good book that you like and wanted to recommend to my audience.
Ego is the Enemy. Can't remember who wrote it, but it's a good book, good read.
I like that. Yes. In one word, what does life mean to you?
Family.
That's a good one. What is your biggest passion?
I've got so many. It's tough. What's my biggest passion? Presence. Being present. Like if I can be here in this moment, then I find joy in that. And it's difficult because as entrepreneurs, we're always in the future or in the past. So I'm passionate about trying to stay here, wherever here may be, right? On this call with you, listening to you, interacting with you, learning from you. I think that's a passion for me for sure.
I really like that answer because that's what I try to do all the time, being present in the present moment. And I think 99.9% of the people, they live either in the past or in the future. Nobody's present in the present moment. And then we only have moment in our life that we live. The rest, either all memory or we just fantasizing things to happen. And if we are present here and take the right decision here, that's going to dictate our next moment and the next moment, and that's going to decide our future. But again, it's a little bit deeper. Let's not go there. So last question, if you could turn back in time and talk to your younger self, what would you tell yourself and why?
If I could go back to 18, 19-year-old David, I'd just tell him, you can do it, kid.
Yes.
You can do it. Just lean into it, man. It's okay. You know, why would I tell him that at 18? Because up until 18 years old, up until that point, and then for many years after, you know, I was always following somebody else's financial plan, right? My father's blue collar advice, you know, the 401k from employers, you know, city pensions as a firefighter. And then I learned that the rules of the game were geared in one direction only, towards entrepreneurship and education. and that it was also dependent on a system that kept everybody else dumb. It kept them dumb, gave them just enough for them to think it was a good deal, right? So I would definitely have told my 18-year-old self to open your eyes, lean into it. You got this, kid. Don't worry. Learn, surround yourself with people who are going where you want to go, and then just give it a go, man. Give it a go. Run at it. I'm almost 60 years old. I still feel like a kid. You know what I mean? So,
That's true.
you know, just enjoy life and go for it.
I think that's the best way to live. You know, as you grow older, you get wiser. There's no doubt. But thing is, wisdom come with age, because you have to grow to get the wisdom, you know, just not age. So that's how you get wiser. But the thing is, but if you go back and change something for me, if you ask me that question, if you ask me if I go back and have to change something for myself, my answer will be most probably I don't want to change anything. If I change something, I'll have a total different trajectory. I won't be here where I am today. So, but I'm happy where I am. Maybe a little bit wiser, not too much. But how can people reach out to you?
Yeah, you can connect with us on LinkedIn. Dave Seymour, Seymour. Just punch in my name, you'll find me. We're actually old school. We have a phone number, 781-922-4418. Reach out. Let us know that you heard us here on this podcast. Happy to answer any questions. Just Google me. I mean, I'm available. freedomventure.com is our website. You can see our deal flow. You can see what it is we do and how we do it and where we do it and why we do it, and engage. And let's see what we can do. I just came out with a new book, so anybody's welcome to a copy of that book. It's called Wealth Without Wall Street. Kind of breaks down a lot of what we've been talking about today. So reach out to me and I'll show you how you can get a copy of that book as well.
Thanks, Dave. I really enjoyed this conversation. Maybe we can have a next conversation on your book. Maybe I'll have you back for the next episode as well.
Awesome.
Thanks again, Dave.
Thank you.